technical analysis with the descending triangle chart pattern, which in this case produces a textbook example of a strong bearish continuation. Now here's a double bottom that has its uptrend steadily reversed. The stable decline connects with the double bottom range, which can be reused as a wide base of support for a descending triangle now. In this next example, there is the general shape of the descending triangle pattern. The main difference is it forms to reverse a trend rather than the more common context of it being a bearish continuation. When the pattern is out of context, it could be less reliable, but not in this case. Since the pattern is clear, concise, made up of large candles, most noticeably and important, the area where the support base is broken through. It still provides a good landmark for a bearish reversal. So naturally, these levels can be reused to reference resistance quite reliably, similar to a pattern like the double top, which incidentally forms quite close to the 1935 and 1910 levels. Speaking of double tops, the next example begins with one. The horizontal range of this double top smoothly transitions to a descending triangle. So it is a structure that combines the initial reversal from a double top, immediately followed by a bearish continuation from the descending triangle. And both patterns reuse the same base of support, which unsurprisingly, along with these other levels, has retained considerable influence before and after the patterns have finished. Sometimes there can be a much more gradual decline instead of just one large break below the base of support, especially when upswing points are made up of relatively large candles. This can result in one large descending triangle formation that can be broken up into several descending triangles. Then there can be a decisive break below the base of support, but it's not unusual if it's a smaller break like in this case, where a double bottom quickly reverses the chart back up. Here's a similar case, a steady decline and a defined base of support, which is not broken through, leading to a failed descending triangle, defined by a characteristic 3 methods rising candlestick pattern that still does slow down upon contact with the downtrend line of the descending triangle and the resistance range made up of the highest swing points in the pattern.